Nihat'cığım YouTube başladı.
Okay. Good evening to everyone. Under the Business Talk series of Ibn Haldun University Management Department, we are hosting today Muhammed Taha Yesilhark from Dubai. Actually, he is in Mexico now, and he is joining us from Mexico. Mr. Yesilhark has been a prominent, prominent practitioner in the sector of finance, especially with his initiative and entrepreneurial, initiatives. He now governs his own fund of Q2Q Capital in Dubai, and till now he has been, part of the management team of too many, hedge funds, different funds from the finance industry. He will talk us about the blockchain industry, the shaping of the new global financial order, what will shape the future, especially with respect to blockchain sector and Bitcoin sector. And he will also talk about his initiatives in Islamic social finance and usage of technological infrastructure for Islamic social projects. We really welcome him, and we're really thankful to him not rejecting our, offer to join us this evening. Maybe he will talk about himself as well to describe. And Mr. Muhammed, it is yours. The floor is yours, please. We would like to listen to you.
Thank you very much, Nihat. I hope you can hear me clearly.
Yes, please. Go on.
Okay, excellent. Thank you so much. I appreciate this opportunity with Ibn Haldun University to spend some time with friends and discuss some of the topics I think that matter currently, from an economic point of view, but also from a very rapidly changing world point of view. As you had said, I'm currently in Cancun in Mexico. You can see some of the Mayan temples, I don't know what it's called, behind me. You might know that the Mayan culture has been existing in the Mexican suburban area here with 5 countries for more than 6,000 years. So I had a tour yesterday and I found it very interesting. So for this call, given I'm in Mexico, I thought that I should have this Mayan sign behind me during this call. Quite interestingly, there is a lot of commonality between Turkey and Mexico. The people here, they love the Turkish culture. Every time they hear something about Turkey, they hear that I'm Turkish, they get very excited. So I could see that there is some deep relationship, and some of the food is actually quite similar, that they copied some of the spices, etc. And these 2 countries have taken from each other. So that's also very interesting. I would like to do this quite interactively, Nihat, if that works. I think these talks are much more valuable when people have the ability to ask questions and go into Q&A.
Exactly. Let me talk a little bit about structure of the talk. The floor will be yours, and you will introduce us your perspective on the future of the global world of finance, as respect to fintech and other dimensions which you may be thinking as necessary to be mentioned. Then at the second half of the presentation, we will have a Q&A session, Q&A session, taking the questions from participants from YouTube, also from Zoom, and try to make the session as interactive as possible.
Excellent. Okay, so first to myself quickly. So my name is Muhammad, like you said, Nihat. I was born in Germany, raised in Germany, and lived half my life in the UK. So I studied business and finance in the UK and in Germany in a double degree. And after that, finalizing those, I started in corporate finance, in mergers and acquisitions within the banking industry, and left very early in 2004 when the hedge fund industry just started up in Europe, I became a hedge fund manager starting in London. And I worked for 3 different firms, the most famous one being Steve Cohen's SAC. Steve Cohen is the individual that has made it into a series called Billions that is being watched globally by hundreds of millions of people, basically. He's been one of the most successful hedge fund managers on the globe. And I was lucky enough to manage some of his personal wealth, basically, during my time when I was in London at SAC. After that, I was the head of European equities for Carmignac, which is a French asset management firm. And since 2017, I'm in Dubai running my own company, Q2Q, like you have mentioned it, Nihat, as well as spending more than 50% of my time on charitable endeavors across the globe, mostly focused with UK registered charities in the UK market, basically, right? But that's about myself. My involvement with blockchain and digital assets has been since 2015. I got interested in digital assets mostly during my time as a fund manager. When you are managing equities, it is very important for you to always think of what can disrupt your portfolio. What is it that can change something in your portfolio and risk the companies that you have invested in? So in that context, I got interested in blockchain technology and been fascinated by it since then. So that's another area that I'm spending a considerable amount of time on, basically myself. And this is also why I'm in Cancun, because there is the world's largest Bitcoin conference happening in Miami in 6 days from now. And unfortunately, because of COVID, you can't fly to the United States if you have been in the Schengen countries. So you have to be in a non-Schengen country to fly there. And this conference is in Miami. There's going to be 12,000 people attending. So it's probably the largest conference in any industry post-COVID globally. And that's also why I came here. I'm an hour and a half away from Miami, basically, to be able to attend that conference. I think that's overall as an introduction. I think what's important is we should start first, where is the world, where are we going? And generally why, like what's the framework that I'm thinking of, basically. And I think after that, things will evolve, questions will come up, and then we can dive into those, if that makes sense.
Sure, Muhammad, please.
Yeah. So where are we? So in the post, in the post 2008 crisis, basically, the response by central banks has been the single most important effect, basically, or event that has shaped global markets. And what has started as an experiment has become the norm. The experiment was, can we suppress risk, basically suppress bond yields by doing something that is called quantitative easing, and will the markets buy our ability to print ourselves out of a problem, basically? And will the markets buy into that by not selling bonds, but actually buying bonds, basically, right, together with us? So will the market challenge us as a central bank, or will the market agree with us and play ball, basically? This was an experiment that started in 2008, and because it has worked with partial effects, but it has worked overall quite effectively, it has become the norm. So to fast forward, what took approximately, I would say, 7 months in the 2008 crisis, the crisis started pretty much in the summer, and it was only until March 2009, so almost 9 months, that the central bank actually, back then, Hank Paulson, we called him Hank the Tank, because he was big like a tank. And Hank the Tank came out and said that he would print as much as possible, and he would open up support for the US banks to not allow any further US bank to fail. That experiment basically took 9 months for them to come up with that solution. Took 9 months of discussions in 2008. The same fast forwarded now in March 2020 with the COVID crisis. It took less than 72 hours, right? I mean, the markets had a significant fall on 12th, I think, March of 12th. And then all of a sudden, within 72 hours, basically the central bank came out, the treasury came out. It was a coordinated response by European Central Bank, Japanese BOE, as well as the US Federal Reserve, to basically support markets. And since then, we had a rally of a magnitude that has surprised even the most bullish commentators on the market, basically. Now, what has been done in that context, approximately 26%, if I remember correctly, 26% of US currency has been printed, basically. So there is 26% more dollars now in the market within a matter of 12 months, a bit more than 12 months, 13 months, than there has been prior to the COVID crisis. So the amount of printing and the amount of support that we have seen in the markets has been completely extraordinary, basically. This is war type a response in terms of monetary and fiscal response to a crisis. And that's why it's not something that should be underestimated or should not be, it needs to be put in context, right? The GDP of the United States is anywhere around 22 to 22 trillion. Out of that 22 trillion, you had printing that has done, globally north of 10 trillion, and only in the US of approximately 6 trillion, which is, stimulus basically, as I said, monetary and fiscal together. So anywhere around 30, 35, 40% of a country's GDP, has been thrown into the mix, so to say, to help and propel asset prices, right? So that's why the first thing I want to start with is, where are we, or where did we start and where are we now? The first thing is, one should not think that there are a lot of guys like the Rubinis, etc., of this world that were always trying to be the doomsayers, basically. Every asset prices will collapse, things will fall down, equities will go to 5 times earnings, and S&P will be down, 80% from the peak, etc. For a market to adjust itself, it doesn't need to be only via the downside, meaning by absolute falls, right? I mean, a lot of the participants here on the call are Turkish, and we know this very well as emerging markets, as individuals that are very familiar with emerging markets or living in emerging markets, right? If I go to Turkey and I speak to someone who has a house in Istanbul, they will tell me, oh yeah, my house is up 20%, basically over the last, whatever it is, 6 months, 1 year, right? It doesn't really matter. Don't get fixated on the numbers. But if I would look at the same asset in US dollar terms, it will show me a very, very different picture. As long as the US is the reserve currency of the globe, any asset globally is priced in US dollars. If an asset is priced in US dollars, then you need to look at that asset in whichever country it is in US dollars, basically, right? So from a Turkish perspective, you were better off for the Turkish lira to be at $3 in terms of the conversion price, and your house being worth 40%, 30% less. You were better off then. In paper terms, it looks like you are better off because your 2 million house became a 3.5 million house, basically, in Turkish lira. But unfortunately, in dollars, that's not the case, basically. You're not better off in dollars. So this is why am I giving this example? Because this is not happening in Turkey. This is happening on a global scale. This is happening in dollars in the US. What I mean by that is, for you, 18 months ago, you were able to buy Apple shares at $40. Now you're paying $120 for the same one Apple share, basically, right? So you're just paying 3 times more than what you were paying a year ago for the same asset, basically. The similar is, for your house in Phoenix, in, wherever it is, in Arizona, anywhere else, basically. So the same you could say with gold, the same you could say with Bitcoin, the same you could say with so many assets, basically, even bonds, right, that are 20%, 30% higher, and basically as of 18 months ago. So it's just that the emerging markets, the same phenomenon is happening in a bigger scale, because emerging markets are always more volatile and therefore are experiencing the same issues in a bigger magnitude, basically. So the name of the game is, I think the pundits that are commentators, the pundits that are commentating, saying that markets are going to be down, or economy is going to be tough, and the world is going to go through a difficult period, are right, but they're wrong in terms of how it's going to express itself. So it's not necessarily going to happen with an absolute downward in spiral in prices. It can also happen with what I call the valve effect, with the currency itself debasing itself versus the asset prices, basically, right? And that's what we have seen. That's why everybody has been wrong, right? The S&P is doing all-time highs. The Dow Jones is doing all-time highs. The Nasdaq, as of recently, was doing all-time highs. And you will, and the same for many other asset classes: the gold, the bitcoins, etc., the houses, the real estate, and the costs, right? So the name of the game is not asset devaluation. The name of the game is the currency debasement or currency devaluation, right? That's really what's happening. And why is that happening? Because from a policymaker's perspective, from a central banker's perspective, from a politician's perspective, it's the most easiest way to steal money from the population. It's the easiest way to have an effect that people will be less complaining about. House ownership in the US is above 70%. So if the US dollar devalued itself last year in 2020 was around 11%, the US population doesn't feel that necessarily as bad as when the S&P drops 20%. In fact, the US person believes because his house has gone up by 11%, he feels like he's richer, basically, because the biggest, most important asset, which is a floor over his head, has actually gone up in value, basically, right? He doesn't know he's worse off because the same Apple share is now worth 3 times than what it was 12 months ago. But in reality, it's easier to sell. You don't lose elections for a 10% currency debasement. You don't lose elections for a 10%. You don't lose political support, or have people going on the street for this kind of stuff, basically, right? So this is what's really where I differ with my views to some of the commentators that are trying to look at the data and say economies are closed, shops are closed, GDP is collapsing, -5, -7, -10. How can the market do what it's doing, etc.? You need to understand the full picture. People don't understand the full picture. They're trying to look at isolated economic events and are trying to say, if my earnings are down, so the asset price of that earning stream has to be down as well. But they don't understand that a valuation of an asset price is not only dependent on the income stream, but also on the discount factor of that income stream, right? So if the yield, if the interest rates are a different one, then you'll have a complete different value on the same income stream, or even on a reducing income stream, basically, right? So I think this is first a general important umbrella that I wanted to span to make sure that people are aware of my thinking, of how I look at things, basically, from that point of view. Is that clear? I don't know. I don't want to go on and bore you, but I think that was an important part that I wanted to make sure it comes across.
It has been a really good introduction of the macroeconomic framework for the recent developments in in the world of finance, actually, because as we all know, the macroeconomic decisions, the decisions of policymakers are, at the end of the day, what is shaping the world around, So therefore, these decisions of Federal Reserve, this decision of U.S. government to provide, direct, a placement to the people, actually, in the times of COVID, really affected. And you mentioned about it, 26% increase in the balance sheet of Federal Reserve. This is really, really helpful to understand what is going on around us. All of these assets, asset bubbles, maybe not bubbles, but, all the increased prices in all markets, in all asset classes that we witnessed in the last 1 year. In terms of seeing what is going on the macroeconomic side, this has been a very good introduction. Now I want to turn the picture to the fintech side. As the developments are happening on the conventional sides of finance, what's going on the fintech side? I think that looking through the issue from the perspective will be helpful. what do you think? This fintech side or this blockchain side, is it, as not totally, but to a certain extent, decoupled from these macroeconomic developments, or are they strongly linked, or a reflection, or portfolio diversification element of those macroeconomic developments? What do you
Yes,
think
yes.
about this? They
Yeah.
provide a new way of diversification as being a new asset class, or do they provide a totally new world to us? Okay,
Yes,
a new world
understand.
or a parallel world, a parallel, universe for us.
Right. Yeah.
Okay.
So that's a good question, Nihat. So, obviously you need to differentiate between fintech in the traditional finance aspect, and then fintech related to blockchain and related to cryptocurrencies, right? So there is two, like the Revoluts of this world, talking in UK terms, or the digital, or like Robin Hoods of this world in the US terms, as applications, as fintech applications, are not necessarily equal to the Coinbases of this world or the Binances of this world, etc. Right? So there is a bit of a differentiation there, and I can give you my word. So the connection, first of all, to break down your question, the connection with the current macroeconomic world of the fintech ecosystem as a market driver, basically as a phenomenon, I would say the connection is the flow of easy money. When you print 26% new currency, and you take the interest rates to zero, people have no opportunity cost of capital left. If you're a US guy and you pay 0.1, in Germany you pay less than 1% on your 10-year mortgage. Imagine in Turkey you pay 1% a month. In Germany you pay 1% a year. That's 10 basis points a month. If you don't pay anything anymore for money that you borrow, your risk appetite goes through the roof. So you will be able to risk your capital in anything and everything, because it becomes very easily replaceable, or very long-term time you have to pay it back, because the cost of it is very low. Your opportunity cost is extremely small. So the connection with the macro world is that if I come up with an idea, I have a nice tech, and I come to you and I say, I want to have a digital bank for Turkey, it's probably much easier now to find the capital, to risk the capital, to potentially start this venture than it would be if interest rates were at 5% in US dollar terms, obviously, right? So the same people in Turkey will not necessarily understand this argument, because in Turkey, the interest rates are above 10%. So it's actually very difficult for startups to try and raise capital, basically, right? But that's the connection, the ability to find capital, to find risk capital, to pursue your new idea, basically, right? So that's the connection, I would say, with the traditional finance world. Having said all of this, I think there is interesting parts within the fintech phenomenon. So if you are doing a fintech purely based on, I have an app and I make it easier for you to execute your banking needs, then I don't find that interesting at all. The reason why I'm saying that is you have just taken a barrier to entry and you've almost taken it to zero, basically. It means anyone else that can come up with an app, that can produce an app, would potentially be able to start competing with you. So I have, completely passed on investing in most of those opportunities. And now, 2-3 years later, now they're coming, that expectation is starting to trickle into the market, where people are saying, wait a minute, but now there is Monzo, N26, Revolut, there's like 20 different digital apps, banks in Europe, and they're all competing for the same customer base. Basically, now the market is starting to wake up, basically, that maybe, there is some competitive dynamic that has changed here that will make it much more difficult for these institutions, for these companies to earn a cost of capital, basically, right? The world was much cozier when there were only 4 banks in the UK and there were no more banking licenses, and you need to go to a branch and spend 2 weeks to open up a bank account. For the banks, the world was much cozier, basically, right? That's the pre-2007 area where they were making 20% return on equity, basically, right? That's not going to be the case. So I don't want to make a prediction on fintech generally. Every fintech is different to every market. People are trying fintech right now where I live in the United Arab Emirates. That's a market that is dominated by government-owned banks. It's very difficult for you to break into that. they might not even allow basically a digital bank to really grab their customer base because it's an indirect taxation tool that they use as well. Market by market. I wouldn't make it blank statement. What I would say is overall of the fintech products that are using cryptocurrency, I think that's a complete game changer, because now you can do funding, banking without borders. Now you can do it without territories, without geographical limitations, basically, right? And you can, like you said, it always starts, Nihat, as a parallel universe, right? I mean, the famous companies, the Binances of this world, the FTXs of these are the two biggest exchanges. They pay their people in cryptocurrency. They spend 90% of their costs in cryptocurrency. They don't even touch enough fiat, basically, right? Apart from the corporate rent and a couple of other bills that they need to pay in fiat, basically, right? So and they're not worried until at some point they need the fiat conversion, basically, right? So that is another phenomenon that I would separate from the traditional fintech world. And there, the issue they have is they live in a parallel world until they get regulated. And then when they get regulated, they pivot, they try to fit into it and then try to come out of it, etc. again and again. Like, so Binance, for example, had to separate their US operations into Binance US with a separate legal entity with the rest of the world, basically. So there's now two different companies because they don't want any US citizen, given the power of the SEC, to be investing in anything outside of the US, right? So you'll have things like that will be happening, that are happening on the crypto side, basically, in that world, in connection with fintech, basically, right? That is happening. But what I want to come up here, and just because, you know, I like to make my points clear that are non-consensus. I want to make those points clear that are not the same that you generally will read in the mass media, that you will read in newspapers, etc. So I want to make that clear so that then it becomes a more interesting conversation. So where I differ, I would say, versus what people think, is that first of all, I think that that decentralized finance is going to eat the world. So at the moment, you're getting zero on your euros, actually negative on your euros and on your dollars in terms of interest rates back, but you can make 5, 6, 7, 8, 10% on your cryptocurrencies relatively safely, basically, as a yield, basically, right? And that is happening all digitally, basically, right? So so I think that's the ability for you to deploy your deposits in a world, in a decentralized manner, basically taking a bank and then just cutting it into pieces and decentralizing it, and then allowing it to exist as a software decentralized on the web, and for you to know exactly what you are investing in and what the cascade is, basically, of your risk limits and what return it is likely that you will be making. That's real innovation. That's such a big innovation that no bank can stand in front of it. No regulator would be able to stand in front of it. They can marginalize it for a period of time, but the trend itself is an ongoing trend that you can't stand in front of it. So this is why what I think what we should be thinking about as, you know, university students as well, is the development from Web 1.0 to Web 2.0 to Web 3.0, right? Until now, it's taken the internet 20 years, from 1997, let's say 1995, 25, 30 years to now, to just connect the world to each other. And the only thing we're doing is sharing pictures and videos and laughing, ha, 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 he, he. It's all nice, but we're doing nothing else. We're sending memes around, we're sending videos around, and we're sending Jum'ah messages and other type of messages around, right? The real innovation is when I'm able to send value around from A to B without a third-party intermediary. That is the real value, right? When I can say, Nihat, I buy your house without having to be in Istanbul. That is the real value. When I can digitally confirm myself on the web without a third party, and I can transact an economic transaction, basically, without the need of having an intermediary like a bank or a notary or anyone else, basically, right? This is real value, because now I can technically sell my house or my car from, you know, Istanbul to Beijing or from Beijing to Taipei, from Taipei to California. You can now all of a sudden trade assets in a much more secure and digitalized way with security and clear knowledge of the final settlement of the assets. You don't need an escrow in between. You don't need to make sure, is he going to pay? Is he not going to pay? Is this transaction going to close? Not going to close, etc. This is the real innovation. And that's what we are entering now. And that's why I think blockchain is such a massive innovation, basically, because that's going to be what's going to change the world, basically, right? This is such a big innovation that all of a sudden, with NFTs, with like non-fungible tokens, with blockchain technology as an underlying phenomenon, it's the financialization of assets, and it's the ability to trade assets globally, truly trade assets globally. Even today, you need to think of it. We are connected completely to each other, but even today, as a Turkish citizen in Mardin, how is he going to buy United States stocks? How is he going to buy German listed stocks? What's the ability of a person in Urfa to be able to participate in the success of Siemens in Germany, or in the success of Daimler, the car company in Germany? It's very difficult. He needs to go to a bank. He needs to open up an account there. Somehow he needs to find a way for them to allow him to sign 200 documents, to allow him to buy international. Then he needs to convert his currency. Everywhere he will lose 5%. In the conversion he will lose. In the conversion back he will lose. And the fact that he trades an asset that is not on the Turkish stock exchange, they will charge him another extra charges because now he has to trade in Germany. You have all these basically hurdles that you need to go through. So all of these will change, and all of these changes comes with blockchain technology, basically, right? So and that's significant innovation, right? And I think in 10 years from now, it won't be even a discussion. In 10 years from now, is if someone sitting in anywhere in Turkey decides like, oh, there is an interesting company that I want to, that I heard has come up with a new phone that is in Taiwan, and it's listed in Taiwan, they just will be able to buy the same company's economic exposure in a tokenized form in a country they live immediately, basically, in a regulated manner, right? So that's just as an overall phenomenon. The important aspect that I believe in is that blockchain technology is also contrary to many things that have been discussed in Turkey as well, is also, I believe, the most democratic and therefore the most Islamic form of currency, because it's a sound money phenomenon in a regulated manner, right? So that's just as an overall phenomenon.
Can you hear me?
Yes,
1 minute.
yes, I can. I can hear you.
Excellent,
We can
because
hear you.
my earphones went off battery. That's why. Okay. So yeah, so this is that's another aspect, basically, the whole aspect of because you mentioned that in our talk that we will also talk about Islamic finance, etc. So I'm happy to also explain of what my views are
Muhammed,
there.
maybe you may turn a little bit off the volume.
Of the microphone.
Yeah.
Okay. Test. One minute. Microphone. Okay. Better now? Is it better now?
It is too low now. A little bit low. A little bit, in between, maybe it will be better. We cannot hear you now.
I have reduced the volume of the microphone significantly.
Yeah.
Is that better?
A little bit more, if you don't mind.
Higher volume, you mean, on the microphone?
Yeah, higher volume.
Okay, okay. So better now?
It is better.
A little bit higher, please.
Okay, I will try to do it higher. Because I was doing it before. So hopefully this is better now.
Yes, that's fine.
Okay. Okay, sorry about this. It's just I lost the earphones, basically.
That's fine. That's fine. By the way, maybe at towards the end of the session, we may take your predictions about what's about the cryptocurrency markets as a market practitioner as well.
Can do, yes. Can do.
Yeah. Please go on. You are mentioning about this blockchain industry, that it has changed the whole world, and in an unstoppable manner. You are saying,
Yes.
but maybe or may not the governments will try to stop it actually, because
No, I
at
don't.
least slow it down, because of the fact that the system itself includes lots of elements that will make the governments to lose most of their privileges.
And Nihat, I think most of that we've already seen, and I think the signs that you have seen from the Turkish government, the Turkish central bank, for example, and the U.S. central bank recently as well, and the Chinese as well, is very clear that they are actually being, and I'm applauding them for that. They are actually being much smarter about it than what general market participants thought they would be. You could see from Turkey, for example, if they would have a misunderstanding of the asset class, if they wouldn't have a good grip of how the asset class works, they would have just banned it, completely, but they haven't, right? So what the Turkish central bank has basically done is a clear sign that they very much understand how this asset class works and how it affects them, and where they would not want to get affected, or where they wouldn't want to lose control, basically. So they are completely happy and completely fine for people to use for the human race to innovate into a new store of value. What they are not happy with is if somebody is trying to replace their currency, because then you can't execute monetary policy anymore. If you can't raise taxes, if you can't know where the money is flowing within your economy, and you can't then affect monetary policy on your people, then you don't have the ability to be the last lender of last resort as a central bank any longer, right? So I think they understand that, and I applaud them for that understanding, and therefore doing the right steps. What they have done now in this case is was completely right. Right. I mean, what was happening in Turkey, and I only understood this when I looked at it in detail, given I don't, spend enough time these days, given COVID in Turkey. But basically, what was happening in the old days in Turkey, where somebody carries a bag of cash, and then you meet at the corner, and then a sum of cash gets transferred from one person to another in the corner. That was happening digitally with stable coins, basically, right? So people were changing Turkish lira into stable coin USDT, transferring it from A to B, and then that person, like the central bank, didn't have the ability anymore to track the flow of the capital, basically, right? So this is completely normal, basically, for a central bank to block that, and to not be willing to allow that. But overall, what we will be, I think, in terms of when we come to the very beginning of the discussion of what happened, printing, devaluation of currency, etc. I think if you look at that perspective overall, the end game of that is obviously a change in monetary understanding of the people. From what we have in economics is two schools of thought, right? I mean, you have the Austrian school of thought, which is advocates of hard money, of sound money. So a lot of gold bugs are in this camp. And then you have the Keynesian school of thought, right, which are basically a newer phenomenon, which basically says the governments should always be the guys that should be acting in a counter-cyclical manner. So they should spend more when the economy is bad, and they should spend less when the economy is better, basically, right? So So that's the Keynesian. In the Keynesian economy, printing doesn't matter. You can always print. It's not an issue. Basically, things don't have to be scarce to have value. Basically, right? The government can direct. The central bank can direct of what is right and what is wrong. Basically, right? And the sound school, it's the exact opposite, right? It's based on gold. It's what Prophet Muhammad SAW in that time where it comes from, basically. If you look at human history of 3,000 years, probably 2,940 was basically sound monetary system, and only the last 60 years, 40 years actually, we've had Keynesian, and then a couple of years in the Ottoman Empire, the last 50 years of the Ottoman Empire, 20 years, and maybe a couple last 20, 30 years of the Roman Empire, you had trials of Keynesian where they tried to print, tried to control monetary supply by basically centralizing it, and both of the times it failed basically horribly, right? So there's an amazing book explaining all of this in terms of the history of this. It's called The Bitcoin Standard from Saifeddin Ammous. I can really, really recommend that wholeheartedly, that book. So my point overall to this is that the question of currency debasement works until it doesn't, right? And that doesn't then is always precluded by the year where all of a sudden the debasement can't be controlled. It doesn't debase by 10% or 8% anymore, which is very difficult to feel, but it debases by 25% or 30%. And then, like in Turkey, you feel it. Everybody talks about it, basically, because inflation goes through the roof, right? In that context, right? So what I'm trying to say is, the question is, when do we get to that point? When we get to that point, that's when the world globally, given the US reserve currency with China and everything happening right now, is going to be then questioning and saying, does the fiat Keynesian economic system, that model, does that work for us? Or should we actually be listening the last, years to the sound money advocates and actually be adopting a Hayek-based, the Professor Hayek was the founder of that, so to say. I mean, he wasn't the founder, Mises was the founder, but he was the biggest advocate of sound monetary systems, Austrian School of Economics. Should we be changing to that system? This will be a discussion, a global discussion, I believe, that the world will have to have, basically, right? There's actually an amazing YouTube rap for the students. They can listen to it.
At this point, I want to open up the another window based upon the concept of sustainability. Sustainability of the debasement, or quantitative easing. From time to time, the concepts are changing, but actually what's going on is this: the central banks are issuing money and distributing it throughout the whole world. Big central banks are issuing money and they are distributing it. So excess capital goes to whatever opportunity exists in the world markets. So related to the sustainability concepts, I want to open the issue of how this system of Bitcoin or blockchain is sustainable in terms of energy requirements, etc. By the way, we had a question on this. Recent attempts of Ethereum to reduce the energy expense to produce energy cost to produce the coin. So related to all of these things, by the way, I want to look to the concept from another point of sustainability related to the social work and social entrepreneurship, which is, I think, one of the main areas of Q2Q capital and your personal work. You mentioned that almost 50% of your work is adherent to the social work, charitable work. So what advantages can this technology provide from that perspective? Sustainability in terms of the system, sustainability of the system, the blockchain system and Bitcoin cryptocurrency systems, and also sustainability in the sense that support of social entrepreneurship, social work, charitable work through this technology. What do you think from on this side, and what types of things you are doing as your personal activities?
Of course. So the second part of your question is easy, I would say. The second part of your question is the link of cryptocurrencies, basically, or blockchain technology to to charitable work and charitable activities is basically transparency. Blockchain allows you to have a much more transparent ability to track expenses and costs and payments that are being made. So it's that's the biggest advancement basically for charitable work. The biggest issue, we always say hayırlı işe şeytan karışır in Turkish, right? So when you do something good, you'll always question and say like, yeah, I wanted to do this, but these guys are spending X, or they're only spending my money on business class flights, and people always make these things up basically for the charitable sector. So blockchain can solve this problem. Blockchain can solve it because you will be able to track where the money has come from and where the money is going, basically, right? So this is generally the easy part of your question, basically, right? I mean, what does blockchain technology add to the charitable sector? It's very clear. It adds transparency, accountability, and clarity, basically, right, of funds and expenses of funds, basically. So that's an easy one. In terms of your first part of the question, in terms of the ESG slash sustainability of cryptocurrencies, proof of work versus proof of stake, basically, right? I mean, I don't know how much this group knows about the technicalities of that, but the one thing that I wanted to say there is, when you look at Bitcoin overall, Bitcoin has the ability in a sound monetary system to be the final layer of settlement. So to be the global notary, to be the world's notary, right? This is how you have to think of it. Like final layer of settlement means to be the final layer of decision making, whether a transaction is valid or not, basically, right? That requires security. Security, you can't achieve in this world something by design. You can only achieve it with hard work. Like Nihat, students in your university, they can't go through and get the degrees by just sitting there and being nice and they need to do work, basically. They need to learn, they need to pass the exams, etc. Right? So that's why it is completely normal for proof of work to spend energy. If something is the final layer of the settlement, like for example, if I need to remember the numbers around exactly, but I think we are approximately at $50 million that every 10 minutes is being transacted on the blockchain. If every 10 minutes, $50 million is being moved from A to B and people are trusting it without a third party, that thing needs to be secure. That thing needs to be unhackable. That thing needs to be unadjustable, unchangeable, immutable. It needs to have all these characteristics, basically, right? For it to have these characteristics, you can't come up with these characteristics with mathematics or with design, because there's always going to be someone smarter from Tel Aviv, someone smarter from California, someone smarter from Beijing, someone smarter from Istanbul, someone smarter from somewhere that can make a better design that can be better than what you have done, basically, right? So proof of stake, so other governance protocols, we say, that are outside of energy consumption, outside of proof of work, basically, are people like that want to get muscles without going to the gym. You don't get muscles unless you go to the gym, basically, right? So you need to do something basically for it, right? So first of all, I want to say that it's completely normal, and the only thing that people will trust is actually something where there is an effort to be made. The reason why people believe in Rolex is because they know the company only produces a limited amount of those watches. And they know it's in the interest of the company to never overproduce, because they want the watches to be expensive and to stay expensive, basically, right? So that's exactly the same thing. The difference being that where I think the whole discussion that we have currently is completely wrong is that the biggest issue of energy right now is energy storage. So we have renewable energy. In some countries, we've already crossed 30, 40, 50% of energy production being in renewables. But the biggest issue we have is the storage of renewable energy, because the wind doesn't always blow and the sun doesn't always shine. We have nights, we have rainy days, we have unwindy days, etc. So the biggest issue is energy storage. At the moment, Tesla is making huge noise with those gigafactories and saying, I'm going to come up with batteries that will be able to store energy, etc. But it's like the pollution that you need to produce to create those lithium cathodes to be able to store the type of energy amounts that we are talking about. It's completely uneconomical at the moment. So Bitcoin actually solves this problem, because you could have a hydro dam in the Amazonas, in the rainforests of of Mexico, basically in here somewhere, and then you could just add a Bitcoin mining unit there that basically converts that energy immediately into Bitcoin, and therefore stores the energy, because you have a price 24 hours a day, and you will never lose that. It doesn't lose in value, that energy. You don't, like, the biggest problem with energy is that you can't store it, right? It floats away, right? So you need to use it immediately, basically, right? So in this case, you wouldn't, even with your lithium ion battery, if you don't use your phone for a week, even if you don't switch it off, that battery is already lost, basically, right? Energy gets lost, basically, right? In BTC, you would be able to conserve that energy. I think within 2021, the world will understand this narrative. The world will change this narrative, realizing that this is actually the best way to store energy, and that actually now you don't need civilizations to emerge where there is energy source. Why did human beings emerge around rivers, around beaches, around things? Because that's where it was easier to have a habitat, to have an energy source, basically. Now, it can be the other way around. Wherever there's an energy source, you can capture that energy, and then you can deliver it at a later time to whomever you want to deliver it, basically, right? So this is another. And Meltem, she's the chief strategy officer of CoinShares. She has a very good presentation on this on YouTube. I can share that. I can find and share that later on. But I think this is the most important differentiator of my thinking, again, versus the market, of what I think the market will wake up to, basically. And when the market understands that, then it will, the use case of Bitcoin specifically as a store of value, as digital gold, will change completely.
Thank you, Muhammad. Maybe you may mention a little bit about what you are doing as Q2Q Capital.
Yeah, so I can tell you just one of the things. Maybe that's because we are not in Turkey yet, but I can share this. Basically, this is the annual report of. I'm involved in a. Maybe I can share another screen as well. One sec. And then also we can take questions. Oh yeah, here. Okay. So I'm chairman of this organization. Can you see my screen?
Yes, we can.
So this organization is called Shamazi. So we give people the power to do good with money, basically, right? This is what this organization is about. And basically here we have 4 products. You can check this out later. It's shamazi.com. And we have a product called My 10 Nights, where you automate your donations over the last 10 nights of Ramadan. So anybody in Ramadan knows that the last 10 nights are the most important nights, because the night of power is hidden in the last 10 nights. So Laylatul Qadr is hidden within the last 10 nights of Ramadan. Everyone wants to catch Laylatul Qadr. We make it easier for people to catch Laylatul Qadr by allowing them to automate their givings over the last 10 nights of Ramadan. And then we did the same for around Zilhajj. So you have the same here for My 10 Days now. And then we have another product called Zakchat, where people can automate where people can calculate their zakat very accurately in a chat mode. This is a very innovative product. We are going to come up with this live next year. And then we have a virality tool called Give Match for charities, where you can promote people to share their charitable action. But to just give you an idea of our flagship product, that is My 10 Nights. Basically, what we have done. I'm sorry, one sec. I just need to find the slide again. I need to get better on this. Here. Basically, what we have done is this is now 4 years old. This year in the last 10 nights of Ramadan, we raised $21 million in 10 days. So alhamdulillah, this has been a very, very successful endeavor. I'll show you, this is 2020 annual report, not 2021, but I'll show you, this was one of our users that said that they like what it is. Last year, it was 111,000 people that have used us. This year, we had 160,000 people, 170,000 people actually. And that last year was $14 million. Now this year was $21 million, growing 50% year on year. And is a tech platform, like I said, that makes sure that you never miss giving on Laylatul Qadr every Ramadan. It takes the money from your account right after Maghrib, wherever you are, in whichever location you are, and then it sends you a message and says, congratulations, if Laylatul Qadr was tonight, you didn't miss it, and gives you a dua or a hadith as well, basically. It happens only in the last 10 nights of Ramadan. And this is where we have donations from. Imagine, look at it, globally. You know, we had donations from Tel Aviv, from Kabul, from Seoul, from Japan, from Tokyo, anywhere on the globe, basically, that you can think of. We've had donations. This is last year. This year, this map looks even fuller. Some of the cities and states we've had donations from. This is one of the projects, basically, that we've worked on, and we've had a lot of charity partners. I do many things. I have 9-10 email addresses, basically. So, but this is just to give you an idea, basically, without overextending this call.
Mr. Muhammad, how do you use those donations? I mean, how do you allocate those donations?
Yeah, we don't allocate them, actually. Yeah, that's a good question. We don't allocate them. Stripe allows you, Stripe is a US company. It allows you to link charities directly on the website. So basically the charities that come onto our website, they show their causes. And then when people click their charity, for example, you know, you choose Penny Appeal, and in their effort for Syria, or in their effort for Palestine, or in their effort for whatever it is, school in Pakistan with the Reed Foundation, etc. And then, you know, those funds go directly to that charity. It doesn't touch us, basically, via Stripe.
How do you do the validation of the funds that apply to you? I mean, how do you trust? How do you do the validation of
validation of the charities, or validation of the donations?
No, validation of the charities.
No. We have a whole team doing that. We work with on the main charities. Basically, we have a huge vetting process that they have to go through. We know those charities very well. 90% of the charities that we work with, 99% of charities that we work with are regulated in the UK and or in the US. We have only been working for US, for English-speaking countries right now. So we're only active in UK, US, Australia, Canada, and South Africa. So, but there's a huge vetting process at the site, basically, that is going on for the charities. But they're all regulated under the charity commissions of the respective countries. But we've had charities in the past that we had on our platform that we have taken down, basically. That's right.
How, you know, is there any mechanism at the platform that makes the charities to report the results of their donations?
Yes, there is.
Maybe you may mention about this impact reporting of the donations.
Correct. There is right now, and we receive them, and then we share them with our donors in an email communication for now. But later on, we are looking to create a part of the website where we will be making all of this public. So we are gaining significant popularity at the moment. You know, if you go on Instagram, you will see a lot of people that will say, not have you donated over the last 10 nights, they say, have you 10 nights, my 10 nights did this year. So that's like almost like Yesilhark in Turkey. You don't say Mendil anymore for a tissue, you say Yesilhark, right? So this is the brand. So we are getting there basically now, and therefore, you know, our ability to influence charities is also going up tremendously, and ability to influence their work and the quality of their work as well.
Ömer Kaçkar may have some comments. He requested. Ömer Hocam, you can unmute yourself and ask your question. Ömer Hocam.
Assalamu alaikum.
Wa alaikum salam.
Alaikum salam.
For this nice event, and thank you for Mr. Muhammad for the presentation. I'm sorry I joined late. I had a class today. So I don't know also if it is a coincidence that today in the afternoon also I was speaking in one of the conferences on the philanthropic platform, or what you call it,
Shazari.
yeah, the crowdfunding, philanthropic crowdfunding platforms. So I talked about Fintera, the Launch Good, and the other global Sadaqa. I think Mr. Muhammad is also aware of all these platforms. So now the issue is how this Q2Q, if I'm not mistaken, can distinguish itself from the other platforms. I mean, maybe in terms of target or in terms of the way they channel the charities or the donations. So maybe Mr. Muhammad can enlighten us on this.
Yeah, I think, Dr. Omar, thank you for your question. I think there is a misunderstanding, maybe because you joined late. Q2Q is my personal vehicle that I use as my basically family office and make my investments. The platform that we are using for this specifically for the crowdfunding is called my10nights.com. My 10 nights, meaning my 10 last nights of Ramadan, my 10, like the 10, number 10, my10nights.com. So that's the platform. LaunchGood, just to give you an idea, LaunchGood raises approximately $60-70 million a year with being active 365 days a week. We know Chris very well. MashaAllah, he's a very good brother and he's doing amazing work. And he raises around $70 million a year in 365 days of operation. We only operate 10 nights a year, and we are now around $22 million basically. Growing approximately 50%. It's a very different tool. We have a very different focus to LaunchGood, and they both have a reason to exist. We're not trying to differentiate ourselves from them because we're not comparable to them. The one thing that I would say is a lot of the platforms, because they have seen that the automation idea of the last 10 nights of Ramadan is working very well as an idea, as a concept, they have done the same. Like, LaunchGood has copied the same idea of and allows you now to automate on LaunchGood for the last 10 nights of Ramadan as well, which is perfectly fine. Our intention is for as many people as possible to be able to catch Laylatul Qadr. So if every charity copies it and allows the same product to their people, to their donors, we are completely happy with that, basically, right? The idea was to spark something and to make sure that people get aware of the last 10 nights of Ramadan and then connect with their creator in a more meaningful way, basically, right? So yeah, that's what I would say in terms of your question.
That are coming from both from chat box as well as from YouTube. Somebody is asking, about Hayri Bahri Kurt has asked us that, about government debt rates. What do you think about the post-COVID impact of government debt rates, which are, historically?
I'm talking about debt versus GDP ratios.
Yeah, of course, debt versus GDP ratios.
There has been a lot of written about it, about debt ratios and debt ratios being too high and that becoming problematic, especially for governments, etc. I'm not a believer in that because I think it always matters what your debt is denominated in. If you're a Turkish government and your debt is in dollars, and it's 50% of your GDP, 100% of your GDP, it becomes problematic because it's in dollars. It's in another currency you can't control, basically. If you're Japan and you have 300% debt to GDP, but it's in Japanese yen, it doesn't matter, basically, because you're printing Japanese yen. It doesn't matter, and we have seen it doesn't matter because Japan is the best example. If it would have had mattered, then Japan should have been bankrupt 5 times over by now, and it's not, basically, right? So debt GDP overall as a phenomenon, although there has been a lot of studies on it, empirical academic work, etc., I think it's very clear to a practitioner's mind, to a market participant that is trying to make money day in and day out, that they don't really matter as a number. Basically, what matters is the constellation of that debt. Basically, right? Is it foreign currency? Is it floating? Is it fixed? If it's flowing for foreign currency, how much is it in terms of your income in the country? How volatile is your own currency versus that foreign currency? That's what matters really, basically.
Yeah, I think that the debt positions of the developed economies will be a matter of issue for the developing countries or emerging countries at the post-COVID area, I think, because, it's always the case that, if your country is a reserve currency country, it was 2012 when I first attended these IIF meetings in Washington, D.C., and the topic was the debt. After the global financial crisis of 2008, in 2012, those were the times when the Euro crisis happened. In 2011, there has been a Euro crisis. And, the questions were related to that. What will happen with that much of that amount of developed countries? And it is continuing still. Quantitative easing is continuing. No inflation. No any issue with this double deficit. Twin deficits of US. Nothing is happening. What will happen?
It's all happening, but you don't see it, basically, like we discussed.
Actually, something is happening. We are carrying their inflationary pressures. Chinese people, we are seeing this in the case of decreased real wages in most of the countries, but this is not told, actually. As emerging market countries, we are carrying that cost of inflation with China, actually, mostly with China. But after the COVID period, what will happen? It's a real question mark, especially under these, highly developing new asset classes. I'm not sure about it, whether it will be.
That's why, Nihat, I've been thinking about the same point a long time. That's why I believe that blockchain technology and cryptocurrency, specifically digital gold of BTC, is basically the biggest opportunity for emerging markets. That's why I've been a massive advocate. I've written articles about this. It's on the Independent. You might have seen my article on emerging economies' necessity to add BTC into the foreign currency reserves. I wrote an article about that, not only there, but I also met Mehmet Şimşek in Davos in 2018, and I gave him my paper on that exact same topic, basically, when he was the finance minister of Turkey. And I have had the same discussions with multiple other emerging economies as well, because I believe that this is the biggest opportunity for emerging economies to get out of the spiral. If your cost of debt is 10% and the US guy's cost of debt is 1%, and he's earning in dollars and you're earning in Turkish lira, what kind of business idea can you come up with to close this gap? If he makes 3% return on his idea a year, he's still producing 2% positive income to him and his investors. If you're making 8%, which would be, more than double better than what he is doing, you're losing 2% every year for your investors. So the game is highly rigged. The game is rigged against you, basically, as an emerging market individual, as an individual that is based in emerging markets. So for you, the only ability to come out of that is to find a system that you can attach yourself to, that is lower end of the S curve, that with adoption, you can actually grow much faster than what others haven't seen, basically, right? That's why it's so important for emerging economies to follow their own people. 15, 18% of Turkish people already are in digital assets and own digital assets somehow, etc. When I was telling Mehmet Şimşek, it was, I said to him, hydraulic dams in the east of Turkey, we should add Bitcoin mining to those. And, 5 billion for the 100 billion coffers of the central bank, let's buy Bitcoin, basically. Back then it was at $4,000. Now, we're talking $40,000, and that's after it's dropped 50%, right? Or 30, 40%, right? So my point is that that's the opportunity for the emerging markets to try and I think that's a blessing from God. It's a blessing from God that you have this opportunity, because Allah will always give opportunities to people. It's only whether we see them, right? So that's how I see, that's how I think about this.
Mr. Muhammad, I have a question. I mean, sometimes I get frightened by the number of Bitcoins. For example, it reaches about 10,000 different Bitcoins. And also the volatility is very high. So, I mean, for example, after the manipulation of Tesla, it goes down by about $15,000. So how do you comment on these fluctuations or on the number of increasing cryptocurrency in the marketplace? I mean, how it will go? I mean, it will increase, and how all these could be managed?
Yeah. So those are two different questions. So first of all, in the number of coins you have, it's now 10,000 approximately. You're right on CoinMarketCap. That's completely normal. It's in a new innovation. There is always multiple different expressions of that innovation. Everybody wants to join. You can create your own coin within 10 minutes. It's on YouTube. You can go on YouTube and see how it's done. Basically, it's not expensive and it's super easy to do. So that's completely normal that you have other people trying to create an avenue for them to make themselves rich, basically, right? For me, it's very simple. One is BTC, which is digital gold. It's established itself over its 12-year history as digital gold, and it's limited at 21 million. Everything else out of that is a venture capital bet. It's a bet on an idea of being the world's biggest computer, being the world's biggest file sharing economy, being the competitor to Facebook, being the competitor to Amazon's AWS, Azure cloud. There is every idea you know of, from LinkedIn to I don't know what you are using in a technological world. The same online casino, anything you can think of, it exists in the crypto world already, or is being developed, is being built. So if you go out of BTC, you are betting on any of those ideas, basically, that you can choose from, and that's a good thing. If you are right, and you choose that one company that is right now relatively early. For example, there's a company that does file sharing, which is the AWS, basically the most successful unit within Amazon is called AWS, where everybody that shares files on the web, etc., is using an AWS server or a Google or a Microsoft Azure server, etc. There is an entity that is doing this now in a decentralized manner. Now, if that protocol is going to become successful, one could argue that could really, really rise in value, basically, right? So if they have an economics that gives you back as a token holder, basically, right? Gives you something back as a token holder. So you can make these bets. That's a good thing, but that's not to say that they are linked to BTC. And you could see this now that, over time, you will see how this linkage reduces. In terms of the volatility aspect, it's completely normal. We are still at the lower part of the S curve, what you are teaching in university, which is the S adoption curve. Every technological advancement goes through an S curve, which is the early adapters, then the appliers, basically, so to say, and then at the very end you have the late adapters, the latecomers to a technology. At the end of that S, if that's the ceiling, it gets closer and closer to that ceiling, right, on that S curve. Basically, when you see, we are at the bottom still of that S curve, going in that exponential phase. So that's completely normal at that bottom to still be extremely volatile. When in 1971, with the Bretton Woods agreement, the dollar got decoupled from gold. Basically, the dollar was based on gold, right? And it got decoupled with the famous speech from Nixon. It got decoupled from gold. The following 10 years, gold was the single most volatile asset class in the history of the financial markets of the United States. So gold was up and down 10% a day, basically, maybe 20% a day, right? So it's completely normal. Why? Because gold was establishing itself as a freely traded global asset class at that time, basically. So, one day people were getting bullish, somebody was buying, was an illiquid instrument in the beginning, etc. The same thing is happening now with BTC. So it's completely normal for it to be volatile. basically. It would actually be unnormal for it not to be volatile, right? It would be very surprising if it weren't volatile for a global asset that is establishing itself in the S curve.
Actually, it has been 1.5 hours, and I think that Muhammed is. Did you get jet lag, Muhammed?
No, I didn't get even a glass of tea. I was expecting you would give me a Turkish glass of Turkish tea or something.
Yeah, unfortunately, I really would like to. I really would like to, more than just cup of tea, with one, also Smith, together with, tea, we may share with you Smith, so that you could do breakfast there. It is almost,
exactly.
it is around 11 or 12 something.
12 o'clock, yeah, noon time now.
So, if there is any other question, is there any other question?
Perhaps
Fatih Bey?
there may be a question from YouTube, Nihat. We should check it.
So one of our students are asking something about much more related, the sustainability, concept of sustainability. They want to hear your voice about what do you think about the real companies, what the companies should do under these COVID times as a strategy, how, generally, what types of strategies that the companies should follow to, increase their sustainability in the post-COVID period,
Yeah, I mean, yeah, I saw that. I saw the question. The only thing I'm not a sustainability expert, but the only thing I would say to this is I have friends that are in the sustainability area, and the biggest issue they see right now is that companies that are not forced to apply sustainability standards are dragging their feet. So the most important thing I would say is ESG as a concept is, that's holistic. It's adjacent to what we call adatullah, right? It works with adatullah, basically with the rules that God has put on the planet, on earth, right? And it's very Islamic from an Islamic point of view as well. Naturally it is. So it's something that we should all embrace, basically, right? Because those, acting in a sustainable manner is what really will allow you to have a flourishing business from a longer term perspective, right? Basically. So that's why, I mean, the one thing I would say is any companies that every country now has their ESG standards. It's very, very clear. You can just look at the most public companies, like in Turkey, for example. You just go to the ISE 100 list of companies in the Borsa, in Turkish ISE 100, and you can look all of their sustainability reports. They are forced to make sustainability disclosures, and if you don't like them, you can still go even better ones from Europe. You can find them, or in the US, but I think Europe is even ahead of the US. So you can find those sustainability reports on the investor relation pages of those companies, and then I would try to apply those even to the smaller entities that are basically that you are involved in. Bahar, I think, is asking the question that Bahar is, for example, involved in, and really take them to heart. Not do them by dragging your feet because you have to, but actually try to really embrace them in believing that they will help in the business to flourish, basically, right, in the medium term.
Thank you, Muhammad. And finally, before leaving, we would like to listen to your maybe estimations or, yeah, of course, we will not take it as an investment advisory, but what do you think about the recent, collapse? We can call it as collapse in this cryptocurrency market. And what do you expect? Will there be a return, or will it go down and turn from a little bit, more bottom, bottom point,
So to I don't remember who it was. I think it was Mustafa's question. So I think to Mustafa's points, I don't have any prediction for anything outside of BTC, basically, right? So this is all venture bets, like I said, right? So these are individual bets on companies or on decentralized protocols, and on BTC again, I wouldn't want to say this as a prediction. Obviously, I can't look into the future And sometimes because my name is Muhammad, people misinterpret this for for being able to look into the future or something, you know. So I don't have that, unfortunately. But the only thing I can say is that with BTC specifically, the driver of the signal, most important driver of the price is the marginal cost of production. You only have two ways to get BTC. Either you buy it on the market by paying the price, whatever the price is today, $38,000, and you buy it, or you produce it by buying the chips and then connecting to electricity and then try to produce it. So the most important driver of the price is the marginal cost of production. What is the marginal cost to produce one more BTC? This is the same for every commodity, for gold, for precious metals, for copper, for silver, for any commodity, iron ore and steel manufacturing, etc., that is being used. We use this metric a lot on commodities, right? And company valuations for commodities or companies that are involved in commodities, right? So the most important thing is, theoretically and technically, it doesn't make sense for a commodity that is being used to sustainably trade below the marginal cost of production, because otherwise everybody would have to shut down the mines and then there would be no copper. If copper would trade below marginal cost of production for a very long time, then nobody would be able to profitably produce copper, and therefore there would be no copper left, basically, right? So copper would have to adjust itself, the price, to the marginal cost that is there so that marginal cost, with the next halving in 2024, you have halvings every 4 years in BTC. So every 210,000 blocks, there is another halving happening. In the next halving in 2024, that marginal cost of production is going to be approximately $150,000 with the current hash rate. So my only prediction is that, you know, within 5 years, we will be trading on or about the 150,000. So we will have touched the 150,000. We might be much higher than that, or we might be touching it and then going back lower again to 120, 130. But from here, you have a 3 to 4x in 5 years, basically, on BTC specifically, just following the marginal cost of production.
Thank you. You know, these are quite good news for the investors of Bitcoin nowadays, if they could have the patience to wait until that time period.
Correct.
You know,
most of there is a good saying: patience attracts wealth, and impatient attacks wealth.
Yeah, very good, very good. Yeah. You know, so
Nihat Hocam,
most of the people here could not reach the Bitcoins from the dutluk times, actually. We have a saying in Turkish, you know, buralar dutluktu bir zamanlar.
Yeah.
You know, I think that maybe some of the people here could achieve it, you know, but I have still suspicions about the Sharia eligibility of the coins world, because of the excessive uncertainty on the product. And, you know, there are lots of counter arguments in the Islamic world in terms of Sharia eligibility, but, you know, that's a reality, actually. That's a reality. And there are also some opinions of the fuqaha who are supporting the cryptocurrency. So
we wrote a 70-pager on this, by the way.
Sorry?
We wrote a 70-page document as National Zakat Foundation on this specific topic. I can share it with you.
If you can share it, we can share it with the participants.
We looked at this in quite detail and wrote a 70-page document on this, basically.
Thank you. Mustafa Kemal Hocam, sizin bir şeyiniz var.
No, Nihat Hocam, I would like to say that, I mean, we are very happy to meet Mr. Muhammed, but we would like to have a second round in later time with him, because we got very good feedback from him. So I would like to invite him to Ibn Khaldun University personally, and also I would like to hear his voice in the forthcoming periods.
Thank you.
Yeah, our interaction with him will increase, by no means. You know, we will not let him just one, you know, conversation with just one program. We will try to increase his appearance in Ibn Khaldun University programs, inshallah, in the future, if the times allows, because He's quite busy, and you know, we know that he is not the man of his age, actually. You know, how old are you, Muhammad? By the way, if you don't
41,
mind.
41.
41. Yeah,
Yeah.
he's quite young, and inshallah he will be representing not only our, you know, as a Muslim, but also as a Turkish financial guy. He is representing Turkey in, I know himself, you know, in Turkey, most of the people are unknown, although they are representing the country in most of the platforms, you know, arguing the voice of the country. Unfortunately, those people are not, you know, not seen everywhere, and that's good. That's not something bad. That's very good. You know, those people should not be seen everywhere, like popular guys, you know, popular YouTubers or popular guys. These are great mind setters, and Muhammad is also, you know, I see him as as a standard setter in the financial world. You know, inshallah, you will be so. So thanks, Muhammad, for your attendance and sharing time. As Mustafa just said, this is just the beginning. You know, this is just the end of beginning. This is not the end. This is just the end of beginning. So we will, inshallah, keep in touch for different works. You know, for different works of yours. You know. By the way, he didn't mention about National Zakat Foundation, actually. It is one of the greatest initiatives of Zakat in the Muslim world, actually, in UK. And following these footsteps, World Zakat Foundations established. And, you know, when I was in UNDP and Memorandum of Understanding, we have signed with World Zakat Forums. You know, so this is also a big initiative. If you have anything to say, you know, as a last word, because it is getting late.
No, I only want to thank you. Thank you so much, Mustafa Hojam, for all your kind words. And thank you for Nihat for organizing this. This was a pleasure. It was fun. I enjoyed it. And I would very much love to, when we can organize it, when I'm in Istanbul, to come to Ibn Khaldun University with the, you know, brand new campus, brand new facilities. Would love to come and do this face to face rather than electronically. Definitely. Thank you so much.
Thank you.
Thank you very much.
And thank you to all of you for joining us today. You know, for this, you know, I think it has been very fruitful. We had mentioned about this macroeconomic framework, what will happen in the future as respect with macroeconomic shaping of the world. We have talked about this blockchain industry, its merits, its sides, you know, positive sides and negative sides together. I think that it has been quite useful for the ones, especially from the university, in terms of shaping their academic studies as well. These topics are hot topics, very hot topics, and you can find plenty of areas to publish very good publications as respect with these areas. Also, this is helpful, I think, in terms of shaping your initiatives, entrepreneur spirit. There are good examples in the world, and increasing the showcases of these good examples will boost our hope related to the future. Hope, not just in terms of Turkey, hope also in terms of the world. Again, thank you for all of your attendance. I wish a good night to all of you and good day. Have a good day in Mexico. And eat for us halal Mexican burger, you know.
Okay, inshallah.
Hot, very hot, you know. For us as well. Okay.
Thank you.
Take care of yourself.
Thank you. Yeah,
Bye-bye.
thank you very much as well.